Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, almost 4 o'clock, and we're going to take a look at what was an ugly week on Wall Street. And we're going to see kind of how things moved around in the S&P after I remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, as I just said, it was an ugly week. And we're now looking at a 3-day chart. I'll tell you what, let's look at a weekly chart. We'll just see how ugly a week it was. To find a week, here's our week right there. To find a red candle that is longer than the one that we experienced this past week in the S&P, just look back with me. You've got to go all the way back to the late summer, or that might have been early fall, but right around summer fall of 2011, when you have this candle, this red candle right there. And of course, we had an ugly candle that also took place earlier in the summer, as this Head and Shoulders top broke down in 2011. Now, keep in mind that the top that we were looking at in 2011 was very well formed. It's a classic Head and Shoulders pattern, and it had a minimum target that was significantly more than the minimum target that we are now looking at from our rather shallow, but still now a confirmed Head and Shoulders top. Okay. As a matter of fact, if we look at our pattern right here on a daily chart, you can see that we have a target based upon the height of this pattern. Let me measure it, show you how you measure that again. You go to the top of the pattern, down to the neckline, you go to the spot where you break down, and you can see that we have a pattern that has a target of the mid to upper 1950s. We closed at 1970 and change. We are potentially a 0.5% away from the minimum target from this top. But one thing that you can really see, I think, in very clearly, is that when we were talking about this potential Head and Shoulders top, and remember, we didn't know if it was going to go to the downside or to the upside, and I still don't think anything could have been called much differently, because we were essentially just sideways for more than 6 months. This could have been an inverted Head and Shoulders pattern right here, but when we came down and started to put pressure on this neckline, and when that neckline finally broke, which it confirmed the break on Friday, you can just see the tumultuous kind of selling that we experienced once this built up overhead selling pressure tipped the balance, and selling started to quickly outpace any buying. Now, at some point, buying will kick in and we'll experience a rally. But when we get that rally, you've got to look at this line now as having turned from support to resistance. So at this point, 2048 or so will be a line of resistance, whereas that same line for about 6 months had served as support. Now, where might we get a bounce? Well, the first thing is, I think we still have to look to our minimum target, which is actually it's a little bit under 1960, but I'm going to still call it 1957 because that was the year I was born, for whatever reason. So, we've got this sell-off. And I know that was a really ugly day, and we had some ugly days back last October, and we had some fairly ugly days this year as well. But this is by far the ugliest day, and it is also, I think, by far the ugliest 3-day stretch that we've seen in a long time. If we zoom in just a little bit, look at it on a 30-minute chart, there you can see it. You can see how it looked like maybe we were going to try to rally when we were just underneath this line, because it appeared that we were maybe forming one of those inverted typhoon flags, but instead of breaking to the upside, it just totally gave way. So we ended up with a day in which the S&P was down more than 3%, and it was just the only word I can say is it was ugly. Not only did we fall that much, but we also, even though we had an already fairly decently descending support line right here that had served and been back tested a couple of times, we not only got back underneath this line, we didn't even get held up by this support line that had worked throughout the months of late May, June, and you can't really say it was working through July because it never was tested in July. Remember, we broke out fairly early in July and did our little back testing there. Now, another thing I want to show you is we talked about how this might have been a symmetrical triangle. You know, the fact is that thing took so long to show us which way it was going to go. I'm not even going to leave that on the chart anymore. I think it was sort of a symmetrical triangle, but we had a false breakdown. Then we had the beginnings of what ended up being a false breakout to the upside, and then we really started to move down in earnest on Friday. As I look at this, it is a little interesting that this line did not offer much in the way of support at all. It is also interesting to note that that our last two lows took place in February of 2014 and October of 2014. Off of both of these lows, we had fairly significant rallies. And this line is lining up right now underneath our minimum target at about roughly 1920. So it wouldn't surprise me if we come down and test this line. Now, here's the thing I think to be aware of. If we do get a bounce here, and we confirm this also as a support line, I don't think it would be. I don't think you can use these 2 points and make too strong a case for this offering support. But if we come down to this and then we see signs that we are firming up here, we could be looking at yet another type of top here, and that would be, and it's one that we have not encountered very much. It's one you might want to do a little bit of research on yourself, but we could be looking at eventually what's called a broadening top. And what's a broadening top? Well, it's where you have a nice rally off of support, a retest of support, another nice rally off support, a retest of support, and then a really big rally that takes you back to resistance. But the whole thing looks like a megaphone that's pointing up. So here would be the resistance line. Here would be the maybe support line. If this is the pattern that we are dealing with here, then I would first expect one more, at least one more bounce on this line, and then you would likely expect a rally that really seems to bring in what is potentially, if this is that topping pattern, the last of the buyers. And this would be a rally that is based upon pretty much emotion. That's why that last rally tends to be more dramatic than what preceded it. So if we bounce on this line and then start to head up for new highs, I think you got to watch that really carefully and be very careful to not get too suckered in that, oh, all is well. Because at this point, if you get turned back down and then you take this line out, then the very likely event would be a trip down, I'm thinking, probably to the 1600s. That would be a significant correction. And that also could be a larger part of an even larger topping pattern. I'm still not quite ready to say that this is the top, but I have to be honest with you, it's hard to call the tops. One of the reasons why I'm not quite willing to say this is the top is because everybody's worried and everybody's saying this is probably the top. And when people do that, it usually goes against it actually being a top. If I want you to think for just a second about what the function of a top is. A top is where the markets have absorbed all of the cash that they are capable of absorbing. And it's like the markets have soaked up or have become fully saturated with cash. And what is going to make the market keep going up when it's fully saturated with cash? Nothing. Nothing can. It won't, as a matter of fact. It's impossible for it to. So, you find yourself at a top. A major top. When people are expressing worry and doubt, and when there are things around the world that are causing upheaval and confusion, and we've been experiencing those things for a while, I don't think that there's enough money in the market right now for this to be really one of those fully saturated topping patterns. And I just don't think the psychology is there. Now, the market can prove me wrong on that, but typically the headlines are all good when you're at a market top. The headlines don't say beware, be aware, or beware, we're near a top. That's not the kind of headlines that you see when you are actually at a top. The headlines you see when you are at a top are things like, this bull can't be stopped, or this market just won't go down. You see things that entice the last amounts of cash into the markets. And who invests at the top? The people who have been sitting on cash maybe for quite a while. So they're the last to come in. Sadly, they end up being those who routinely buy high and then sell low. So, it was certainly an ugly week. Really an ugly 2 days, because until Wednesday, until Thursday, it looked like we may be setting up a breakout over 2105 or so to come back up to our neckline up here. But instead, it just completely went in the opposite direction. So it'll be interesting to see what happens on Monday. You can see we even had a trend line here that was headed down at nearly a 50% per year annualized rate. See it here, 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 and what happened? We paid a little respect to this line on early on Friday, but then we just plowed on through it. So that looks to be, you could make the case that this was some overdone selling, and maybe it was, but until we get down to this target level around the upper mid 1950s, I don't think you expect any great things out of this market until we get that minimum target out of the way. So guys, that as far as how the week went, we knew coming into this week that we could go up or down, and I hope I was accurate or I hope I was effective in portraying that to you, that we had two lines, that no matter what was going on in between this line and this line, what counted was which one of these lines got taken out first. And right now, obviously, it is this lower line. I didn't want that to happen, but hey, you probably didn't either. So, if we do rally, what do we look for? Well, first, I see no sign yet of any kind of bottom. Friday was just straight down. I don't see anything on the chart where we can say, well, here's a trend line, or here's this, or here's that. This is just absolutely fell off a cliff. If we look at it on a 5-minute chart, you know, there is simply no place. I'm going to get rid of this failed thing here. That looked like a decent call until it totally did not work. But there is no, you know, I guess you could say here's something of a support line, but what good is a support line that's heading down at an annualized rate of loss at 99.2%? So maybe we come down to this and then we bounce back up, and maybe after we do that, maybe we come back and we snap a line like that, and we say once we get over this, maybe that's the sign that we're ready now to rally. But when we do rally, we'll do so with this in mind, that this line could very well likely turn the markets back down for another leg down. So this is now a situation where, even though I don't think we're at a major top, I think we could be at a significant intermediate top that would serve to probably or to serve to potentially take us down a bit lower, maybe to the 1920s, losing another 2.5%, at which point maybe we get a bounce from this trend line right here. So guys, we got to watch it now with a bear mindset, but still realize that we've seen things like this in the past. We saw it in 2011. We saw it in 2010. We've seen some fairly significant drops that were not quite as dramatic as that. Even one in the fall of 2014. The chart is going to be, even in a bull market, is going to be riddled with areas of significant intermediate and short-term corrections, and it looks like that's at least what we're going to be seeing here. And frankly, at least we've already seen some of that. But where it turns around, our goal now is to just be mindful of some little signs and to try to spot where this market starts to turn things back around. So guys, there is your video for the week ending August 21st, and I was really hoping we would be making it back up to this line on when I did Wednesday's video, but we knew that this was an important support line, we knew this was an important resistance line, and now we know it is the support line that has given way. If you are looking to take profits, it may not be a bad idea to lighten up on a return to the low 2040s, because this line should now, as I mentioned, should now be turned into resistance. So guys, that's your video. Thanks for watching, and thanks for your support. Take care.